former HSBC trader to fight extradition to U.S. in Forex case. Briton denies allegations of manipulating sterling exchange rate on client deal. A British former trader at HSBC is to fight extradition to the U.S. to face charges of manipulating foreign exchange benchmarks. Stuart Scott, 44, was arrested on Monday in the UK at the behest of US authorities, who have charged him and his former boss with forex rigging. He was conditionally bailed after posting £100,000 security. His bail conditions include a ban on travel and having to report weekly to police. Mr. Scott is due to appear before Westminster magistrates on July 31 for the first hearing in what could be a protracted legal battle over whether he is sent to the U.S. to face trial. The court confirmed his case has been listed for a contested extradition. "I can't confirm Mr. Scott has been arrested," said Ann Davis at Gunnar Cook, his solicitor. He strongly denies the charges. "Given there are ongoing proceedings, it would be inappropriate to comment at this time." The Department of Justice charged Mr. Scott and Mark Johnson, the bank's former head of Forex cash trading, last summer. Mr. Johnson, also a Briton, was arrested in July at New York's John F. Mr. Scott had remained at liberty in the UK. U.S. authorities accuse the pair of making $8 million in illicit profit from front-running a $3.5 billion Forex deal conducted by HSBC in 2011 on behalf of Cairn Energy, a client. The Dodge alleges they cheated the Edinburgh Oil Company by buying pounds ahead of the deal, knowing it would push up the price of sterling that they were then reselling to the client at a higher price. A colleague then allegedly told Cairn that the reason for the price spike was a Russian bank in the market. Mr. Johnson has pleaded not guilty to the charges and is on bail awaiting trial. Mr. Scott has not had a chance yet to enter a plea. The case may raise issues of jurisdiction. The UK Serious Fraud Office dropped its own criminal investigation into rigging of the $5 a day Forex market after deciding there was insufficient evidence to mount a prosecution. When weighing extradition to the US, a British judge has to be convinced that the allegations amounted to a crime in the UK under the doctrine of dual criminality. The allegations against the HSBC duo are separate to those being pursued by the Dodge's antitrust section against 3 UK-based former Forex traders, known as the Cartel, at Barclays, Citigroup and JP Morgan Chase. They were charged with 1 count last year and are considering cooperating with the Dodge, say people familiar with the matter. In return they would seek to be bailed and be able to travel between the UK and the US while awaiting any trial. HSBC declined to comment on Mr. Scott's arrest. The bank was one of 6 to pay a total of $4.3 billion in a 2014 global settlement over the Forex rigging scandal. It is facing a separate legal battle in the UK from AQ Group, a currency investment firm, over 3 large Forex orders, each worth more than $100 million. AQ alleges the bank ripped it off by front-running its orders. Part of its impetus for the claim was the U.S. move against Mr. Johnson and Mr. Scott. The bank previously declined to comment about the AQ action.